this is a conversation amongst two old friends.
That's right.
We're going to really treat it this way. We've known each other a long time, and what we wanted to do was really have a moment where we talk about impact investing. We talk about the venture capital space. We talk about where we all play a role in that, and most importantly, where institutions like my firm, Bank of America, play a role. We have made a commitment in 2020 to really make a very significant investment in venture-backed companies through firms like Zeal, through Nasir, and really thinking about why it's important for us to make those investments in not just our communities, but Black, Brown-led companies, women-led companies. And so this is just going to be a moment to kind of talk about one little component of that as we think of the onslaught of work that needs to continue to happen within the venture space. So, my brother, it's always good to see you.
You too.
I'm not gonna assume everyone knows you the way I do.
Yeah.
He will DJ a little bit later. For those that don't know, he has an ability to spin on the weekends, but
vinyls only.
Absolutely. So as we kind of think of that, why don't you give him a little bit of your background, how Zeal was started, and just any kind of highlights you want to do about the fund, right?
For sure. So first of all, Morris, thank you for the invitation. Bank of America, you and team are sending a powerful signal as it relates to where we are now in this country, where we, building on top of 2020, you're still underwriting, and that is sending a powerful signal, and the firm, Zeal, will not be where it is today without your partnership. And so thank you for your leadership and friendship. And I'm just glad we're having this conversation in our own backyards, because we think about where we are now. We're at the center of policy, business, and innovation. And Zeal being headquartered in DC was very intentional. The fact that most of my peers are in San Francisco and New York City, I felt it was important to be a firm that's located in our nation's capital. I have dedicated my career for the past 10 plus years rethinking how, where, and who we underwrite, invest in as it relates to mission-driven technology companies at the earliest stages. I've always felt that our most largest problems are also our biggest markets. And I think about my track record from investing. Actually, I started my career at Goldman Sachs, but my venture capital career started off at a coffee shop. I used to own a coffee shop in New York City. It was part incubator and part coffee shop, which is now most coffee shops, we can all argue. And it was there where I met Morris, a number of entrepreneurs, and those entrepreneurs connected with a lot of investors. And I learned about the private markets, venture capital. I was always interested in responsible, or we call often impact investing, and always had his one foot in, one foot out, focusing on education, the role that technology plays to increase student achievement, education, or employment attainment. And I and then just continue to fall in love with investing at the earliest stages. And so fast forward today, I founded Zeal Capital Partners to focus on backing exceptional diverse management teams that are rethinking the building blocks of wealth, from education to employment pathways to financial inclusion, and now health equity, which is a common theme I'm hearing a lot here, which you can double click on. And I believe between healthcare and the future of work and learning and the way we think about financial services is critical to turbocharging economic mobility across the country and at scale the globe. And so very, very much excited to have this conversation with you.
We're excited to be here as well. So in 2020, we made this significant, double down on how we think about the venture world. You were one of the first firms that we invested in. Mm-hmm. Can you talk about that process, how you think of the fundraising process overall?
Yeah.
And, just on the website, you talk about inclusive investing mandate. Break that down to us.
For sure. When I decided to, so I credit David Rubenstein and Ken Chenault, two of my big mentors. And they pushed me and said, Nasir, you're 34 years old at the time. You have a track record. You have a solid reputation. You tend to be going into places and cities where most aren't. Why don't you go out and start your own venture firm? And even with a track record and with a solid Rolodex and entrepreneurs being my best reference, it was a challenge. And I ideated Zeal all 2019, went in the market, legal docs in hand, January 2020, not to forecast what would happen 4 or 5 months later, social unrest, COVID picking up. And so I felt that I should have probably possibly, pause and just weigh this thing out and come back. But my grandmother, her and I, it was back then, we had a conversation. She asked me this question. We were talking about leaders, activists, and she was curious who were those, we had a conversation, who were those activists and leaders today? And ultimately, and my grandfather and I had a similar conversation, they said, it's you, baby, it's you. And I thought that was powerful as it related to new leaders and how we're showing up, not just as activists, not just in the boardroom, but also as innovators and entrepreneurs. And I felt very strongly when I look back at my track record, one overarching theme was the way I was going about building team and how that over-indexed in more black and brown and women-led entrepreneurs and where I was going across the country, not just very few places. And the sectors I was focusing on and the metrics of impact metrics I was tracking. And that's inclusive investing. A five-prong market-back approach that allows us to keep alpha, achieving above market rate returns front and center, and impact. And I believe that, and we trademark this strategy. And I'm just excited to, even while early, execute this strategy because I believe it should be the gold standard. Whether you're an NEA or an Andreessen or you're an emerging manager, if you're in the private markets or the public markets, inclusive investing, everyone should adapt it so we can level the playing field so that more capital gets allocated across the country equitably and at scale of the globe. And this is where my work is rooted, in equity. And we cannot discount the role that equity plays in access to capital as we talk about all the things that's happening with DE&I. And so I'm just really excited, even while early, to have a bold vision. And again, having backers like like Bank of America. Again, we want to have the capital to deploy that to entrepreneurs. That's critically important too.
Well, I'm glad you had that conversation with your grandmother and didn't put it on ice, as we kind of went through those things. So I'm a capitalist, and I think that there's a role for that, within social and impact investing. But more importantly, it's the work that you do with your founders. Can you talk a little bit about that process, the portfolio companies? There are definitely, and congratulations on one significant one that has done quite well. And what that process is like for everyone.
For sure. I think it's important and also exciting to partner with founders at the earliest stages because you're at a point in their life cycle where you're shaping governance, you're shaping culture, you're shaping how they interact with the community. And of course, to your point, they have to scale, get more revenue and market share, et cetera. And so we recognize that our role is not just to add capital, but recognize there are other areas that companies need support on. I mentioned governance, thinking about their sales, go-to-market strategy, thinking about technology. How do they get from version 1 to 2.0 and beyond, and branding as well, both as a founder and as a product or service. And so we built a customized portfolio management framework that allows us to help us understand where we need to spend the most time, but also recognize that we're not hovering over these founders in terms of allowing them to run their business day to day. But to your point, yes, we have some star portfolio companies. I think it's exciting to get in early, because when you get in early and those companies perform well and reach billion-dollar status and hopefully go off to reach the public markets or get acquired, that looks great. First of all, it's wealth creation for the founders and all those involved, but also keeps us in business. We need firms, and that's a little biased, but we do need firms like Zeal, and have a lot of peers who are in this market today who are also mission-driven and actively investing in diverse entrepreneurs as well, to win. And Asusu is a great example. Asusu is led by Wamino Abbey and Samir Goel. And I met both Wamino Abbey and Samir Goel when they were just a couple $100,000 in revenue. And we were the 12th institutional firm that they met. And they got 11 no's, and probably more no's from just other, angels and et cetera. And so they, while they were so early relative to what we were looking for, first, you just wanted to run through a wall when you met Wamino. They are first generation in terms of in this country. They come from the other side of the tracks. So they already had they already had a chip on their shoulder. They clearly had Zeal, which is, that's the whole story in terms of naming the firm Zeal. It's everything you want in a founder and a partner. And we took a bet on them. And 16 months later became $1 billion, one of the few black-owned managing startups that became $1 billion company. And we still evaluate them at $1 billion company. And so they're great examples. And again, I think we need more Asusus, obviously, to keep us in business, to prove to the limited partners, folks like Bank of America and others, that diverse managers have unique networks, they have excellent investment acumen, and they just have a unique perspective and domain expertise in these categories. And so Asusu is just one of 38 companies across 3 accounts, and I'm just really excited again to join these journeys so early.
Yeah. Congratulations. It was your commitment in them that also helped that, and I think that's important. One of the things we talked about last night on the phone was how the business has changed in the last 18 months with things like interest rates, policy that's out there, and just the overall economic climate for minority founders.
Yeah.
What would you like to say to this audience about that? And what are some of the things that you're seeing from your lens with the increase in rates and some of the other factors that come into play?
So I've been so impressed at how our founders and even founders I talk to who are not in our portfolio have adapted to the market. It reminds me how important it is for founders to be coachable, and when markets shift. And to your point, we're still coming out of, as investors, coming out of this 2020, 2021 market cycle where you had low interest rates, you had high liquidity, which yielded valuations out of galore, and so there was just capital everywhere. And since then, over the past 24 months, we've seen high interest rates and lower liquidity. You've seen the denominator effect being that you have my peers, GPs, who are going out to market, and they have a hard time. We're having a hard time fundraising, which impacts our inability to go out and invest in the founders. And so all that dynamic and shift has impacted valuations. It's impacted lack of liquidity in the market. And so for us, the number one theme has continued to be portfolio management. So literally leaning into our portfolio companies, actually doing two-pronged, leaning into our portfolio companies, ensuring that their burn is a little lower than it has been, and making sure their they're expanding their run rate, excuse me, a bit longer because of this, there's just not a lot of capital out there. I think the other component, which I think is critically important, especially as an early stage investor, we're meeting with up the capital stack, Series B, Series and beyond, from the NEAs to the General Catalyst to the Lightspeeds of the world, and even those who are category specific that align with our investment, our categories. What's your now preferred profile of company since the shift in the market? And so what we're finding, for 2020, 2021, $1 million in ARR can get you a Series A term sheet. Now it's a little further. You got to be doing at least 2 to 4, upwards of 4 million in ARR. And so you have some founders who have blind spots and feel like that we're still in this 2020, 2021 stage. But for the most part, particularly Zeal portfolio companies, they've adapted. And that excites me, and we see that with new term sheets over the past few weeks.
Yeah. So, as we kind of think about going up a little at a higher perspective and a higher view, what do you think of the venture community right now, and how, if we look at the percentages of Zeals out there, there's very few. Yeah. And so rare air is something to congratulate you on, but it's also something to pause and think, well, what are we not doing within our various communities, financial institutions, and policyholders
for sure
around making sure access to capital is there?
For sure. I think, Morris, I think I shared this with you before, we don't know each other the way we should. We operate in silos, and respectively, our work is important. Policy has a role. Everyone has a role. Big government, I love local government. I was Brookings and John Legend, what is it called? Starts with an H. Someone help me out. John Legend's new project. Human level, thank you. Human level is a great example in the importance of, really understanding what's happening at the local level to get everyone excited about voting and things of that nature. And then there's the innovators, there's entrepreneurs, there's the funders, there's the activists, who I never want to discount because they do play a major role. So I think there's just this missing opportunity to collaborate and have more dinner table conversations of those collective stakeholders. But where I'm hopeful is that I know that actually does exist. We're talking about doing that right now. And so I believe in this concept of islands of excellence, this idea that some of our biggest problems actually already answered. The way we think about communities, actually, there's many examples out there, but haven't scaled in a way that we need in efforts to understand each other, to exchange resources, to mentor the next generation. And so I am optimistic that we're going to see more of diverse stakeholders coming together and grabbing a bite and just understand each other's priorities and resources. And I wholeheartedly feel folks like myself, you included, and a lot of my peers, particularly diverse managers, we need to continue to lean into each other, because a lot of us are early in our firm building. There's making great investments, but there's also great governance. And that part is where a lot of firms kind of falter. And so that's my commitment, is to not just do my work, but ensure, and again, going back to DC, ensure that policy is at the dinner table, ensure that doctors are at the dinner table as we think about health equity, and of course entrepreneurs and those of big corporate, et cetera. And so that's my take.
We could do this all night, that, and we have.
Absolutely.
Everyone, I'd like for you to help me thank Nasir, Qadree, Zeal Capital.
Thank you, brother.
Thank you.